Back with Markets at Noon, we've spoken to one consumption giant, Asian Paints. Let's shift focus to an FMCG staples company, and that's Marico, reported largely inline set of numbers for quarter three. Joining us on the show is now the MD and CEO of the company, Mr. Saugata Gupta. Mr. Gupta, hi, good afternoon. Let's start by talking about your volumes. India volumes grew 8% on a year-on-year basis, but Parachute and Saffola volumes, they remained under pressure. What gives you the confidence of a meaningful volume recovery next year?
We have been delivering sector outperforming volume growth numbers in spite of, in the case of Parachute, we have taken 60% price hike because of unprecedented inflation. I don't think I can think of any global brand, power brand taking such price increases and showing such resilience. There's been a very mild volume growth, but if we look at transactions, because we have taken MLH drop to manage price point packs, actually transactions have grown 1 or 2%. And therefore, we have continued to deliver high single-digit volume growth continuously in the last 4-5 quarters, and we have multiple vectors of growth. And as the copra inflation eases out, I think Parachute volume growth will start stabilizing. As far as Saffola is concerned, I think we have taken the conscious choice of driving value over volume, and therefore we are focusing on some of the premium parts of Saffola, including driving the cold press oil, which is doing very well.
All right, but Mr. Gupta, now let's touch upon your margins, because your margins have taken a bit of a hit, more than 200 basis points of decline in quarter three. Where are the margins headed in FY27 is something that we would like to know, especially with the copra prices falling and the food scaling up.
Again, with such inflationary pressures, we have delivered again double-digit EBITDA growth. Copra has been, around 25 to 30% from its peak. Most of the other raw materials are in control, and therefore we are extremely confident about delivering at least a 150 to 200 basis points margin expansion next year, which translates to approximately at least mid-teens bottom line growth as a base case.
Okay, so that guidance sounds very optimistic. Let's talk about market share, Mr. Gupta. With over 95% of the portfolio gaining or holding market share, which categories are driving this momentum? And on the flip side, where are you still seeing some competitive intensity?
I think there is competitive intensity, which is there, but I think one of the good things is that in a lot of cases we are seeing competitive, intensity has become rational. We continue to focus on value-added hair oils growth, and this is a peak value share which we have garnered because we are focusing on more of the mid-premium and the premium segments in value-added hair oils. We have gained share in coconut oil in most of the categories. I think our entire focus is ensuring that a majority of our portfolio continues to gain both market share, penetration, and distribution across categories. And also, we always focus on driving high, at least a base case, high single-digit volume growth. And obviously, we had margin pressures this year, but they are easing off, and therefore next year it will be a very good story as far as margins are concerned.
All right, we look forward to that. But copra prices, they are down 30% from the peak. Would you be looking at passing this on to the consumers by taking a price cut in Parachute anytime soon? What impact would it have on your margins?
So, when we took the price increases, there were, I think we didn't pass on the entire price, the input cost increase to the consumers. So we're waiting and watching in terms of getting a visibility of what does the copra price look like for next year, and we'll take necessary pricing action to give value to the consumer and ensure that we get back into a stabilized volume growth over the next couple of quarters.
Okay. Mr. Gupta, shifting focus, let's talk about the VAHO, or the value-added hair oil segment. That delivered strong 29% value growth ahead of what the street was estimating. How sustainable is this growth for this segment, and what is going to drive growth for VAHO going ahead?
We did a repivoting some 3 quarters ago where we decided to focus on the mid and the premium segments of value-added hair oil and drive investments behind it and investing behind brand equity and defocusing a little bit on the price point packs at the bottom of pyramid because we were facing irrational competitive intensity. In any category, if the market leader starts to invest behind brands, brand grows, and we have done simple things, I think, as investment behind brand equity, Setu-led, distribution expansion. So all the value-added hair oil brands have increased weighted distribution and reach. So it's a fundamental work that has happened. And we are extremely confident that we will be able to sustain this double-digit growth over the coming quarters.
All right, but it seems that you are targeting 2.5 times of average run rate growth by FY27 for your digital first brands. Help us understand what will drive this growth.
As far as digital business is concerned, we are looking at a 2.5x by 27 and getting the 27, 28 over the next 2 years and getting the operating margin into 10% double digits by the next of 2 years. So I think we have multiple vectors of growth in both. I think what we are looking at is consciously driving not only revenue but also improving profits every year.
Okay, and shifting focus, Mr. Gupta, let's talk about your latest acquisition that's 4700BC. How does this acquisition change your premium food strategy? Popcorn is a category that you don't traditionally operate in. And when do you expect it to become EBITDA accretive? Also, on the back of this acquisition, are you looking at more acquisitions sometimes in the near future?
So as far as 4700BC is concerned, it fits into a gap in terms of we didn't have any what I call a premium gourmet snacking. We have been focusing only on health and wellness in food, and we believe that by getting into this, we are doing a significant TAM expansion. This brand, obviously, with the Marico access in terms of go-to-market in premium food GT as well as modern trade, will have significant benefit. We will have significant cost synergies between the digital brands and also the Marico ecosystem to accelerate its break even. But we will continue to use some of this to invest behind growth. And we are extremely confident in the next 3 years, this will become a 500 crore brand. The recent ARR has been around 140 crores for this brand.
All right, and Mr. Gupta, international markets delivered strong growth for you. How confident are you in sustaining this momentum amid the macro volatility in your key geographies?
Again, we have been consistently driving international business growth amongst the peer set companies, a consistent, both profitable and double-digit constant currency growth for at least a huge number of quarters. I think we are following two things. One is we are reducing concentration risk both for both portfolio and countries. We are investing behind brand building. A significant amount of growth is coming from innovation. So therefore, a double-digit to mid-teens constant currency growth in the international business over the next few quarters is something we are fairly confident of.
Okay, and Mr. Gupta, lastly, the union budget is just around the corner, and we have to ask you, what are your expectations, or what is the industry expecting from the union budget this time around? Anything particular to the FMCG sector?
India is doing very well. I think it has been extremely resilient, and a lot of actions have happened to drive consumption, investment behind infrastructure, and of course, and fiscal discipline. And I guess there's things about the continuity. And I think the recent FTAs which India has done a very good job. So we are extremely confident about this economy, and obviously consumption, employment generation, and infrastructure investment is important.
All right, Mr. Gupta, with this, we let you go. So good having you on the channel today. Thank you so much for your time and wishing you all the best for the upcoming earnings.